Hey everybody, so I just want to say I'm just a little bit frustrated with the current price action in the stock market. So right now, we had this massive rally, and what I'm just a little bit worried about is that a lot of people are going to get screwed over in this next little rally that we're going to have here. So after Jerome Powell talked yesterday, we had this huge rally. We went from about 394 all the way up to today around 410. So now we're at around 407. And there's a lot of resistance right at this trend line right here. So this breaking out, of course we're going to retest it. So that's what's going on right now. I don't know what's going to happen in the near future. I don't know if we're just going to tank from here or if we're going to go up a little bit more. But the question that I'm asking myself is, hey, is S&P 500 worth this much right here with interest rates as high as 4%, with massive mortgage rates, like 7%? So you have to start thinking, there's a lot of things going on in the macro that are very dangerous. And we saw, all these companies, they're pulling back on hiring because they know that things are going to slow down in the future. These major corporations, they have so much data. They have big data. They're mining data all day long. So they know that, there could be a potential slowdown in 2023. So what's going to happen then? You're going to start seeing earnings come down, and on top of earnings come down, we're already seeing massive multiple compression. So, is it just going to be the same thing as last year? So let me just show you what price action looked like last year. So I'm going to go on to the 5-year weekly, and I'm going to zoom in a little bit. So here's what I'm going to zoom in right here. All right. So we're going to go look at this chart a little bit. So right around here, this was October of 2021. And right here, we saw this massive rally. And then we chopped around sideways. And then finally, in January, we hit this peak right around 480. And then we started selling off. So you have to wonder, why did we even get this high to begin with? We all knew that interest rate hikes were coming in 2022. So how did we know that? I mean, the Fed basically told us in 2021. So let's just go over to the Fed meeting dates. So right here, I have this website. It's thefederalreserve.gov. And this is basically just looking at their FOMC meeting. So let me just click right here to 2021. So in 2021, we had this meeting in December. And in December, they gave us these projection materials, which basically tells us where the Fed is thinking interest rate hikes can go. So if we're looking at this December 15, 2021 projection materials, we see right here, it says the federal funds rate. So this is their target. And it's the median target right here, as you guys can see. So we're around 0.1 in 2021. But in 2022, they want to take this to around 0.9. So that's implying about a 75 basis point rate hike. So we all knew that this was coming. The only issue was we didn't necessarily know when it was coming. So, we just have to look at this a little bit. So if we go click here, 2022, we know their meeting schedule. We know that they're going to meet in March. We also knew that in February, we had the Ukraine war. And Russia invaded Ukraine, and this was causing inflation, and it was causing a crunch in supply chains. So, it was highly anticipated in March. We were going to see some sort of rate hike. So, in March, we got that 25 basis point rate hike. So if we knew that, we're going to see rate hikes in as early as March, why were we rallying so much in January? So let's just go back to this chart. And if we're just looking at this in hindsight, it looks pretty sinister, Maybe it looks like a bunch of rich people were just dumping right here. They decided to pump it one last time, and then they dumped everything on retailers. And retails basically are holding bags. So, this doesn't necessarily look all that great. And, the same thing could happen right here. Maybe smart money just dumps on retail again, and retail ends up holding the bag yet again. Maybe in 2023, we could see another massive crash. Or maybe we just go all the way back here and we backtest, and then maybe we chop around for a bit. We don't necessarily know what the situation is going to be, but what we do know is that interest rates are going to be higher in 2023, and they're likely going to be held. So how do I know this? Well, I mean, the Fed basically told us in September. So let me just scroll down a little bit right here. So in September, we had this projections material again, and here's what they told us. So if we're looking at this, let's just scroll up a little bit. So we have the Fed funds rate, okay? They're expecting for 2022, it's going to be at 4.4%. So that was basically implying that in November, we were going to get a 75 basis point rate hike, which we did, and a 50 basis point rate hike in December, which we may still get. So when Jerome Powell was basically talking yesterday, and he was saying, hey, you know what? The pace of rate hikes may slow down a little bit. That was not new news. That was old news. We knew this in September. So in September, they're planning to just raise another potential 25 basis point rate hike. So you can see right here, they're looking at 4.6 as the median for 2023. That's implying another 25 basis point rate hike, and basically keeping it there for the entire year. So, it was pretty obvious. Hey, you know what? The pace of rate hikes are going to slow down. I mean, nothing new there. So why exactly are we rallying like $17? It doesn't make a whole lot of sense. So the narrative is basically, hey, you know what? We thought that it was going to be even more than that. When they told us in September, it wasn't. So, it's kind of funny. They constantly change this narrative of what the Fed is going to do when they told us what they were going to do in September, and it hasn't changed a whole lot since then. Now, we have to look right here. In 2024, they're expecting to pull back. So essentially what they're expecting to pull back is about 75 basis points. And that's pretty much just reversing any sort of rate hike in 2023. And one rate hike, the most recent one, in 2022. So that would be a 25 basis point rate hike from 2023 that gets reversed, and a 50 basis point rate hike that gets reversed from 2022, the December one. So if we're looking right here in 2025, things look much better. So, the outlook looks a lot better for 2024 and 2025. And we have to remember that there is a lag when they raise these interest rate hikes. So by 2024 and 2025, we will definitely see that lag come in. And this is very likely when they start doing the bulk of their interest rate cuts. But we have to remember, we need to see inflation come down significantly. So, they pretty much want inflation to be around 2%. So when they're looking at core PCE, they want this to be around 2.1% in 2025 and 2.3% in 2024. So if we do start seeing all of this be on track, then it's very likely that we could see these rate hike cuts here in 2024 and 2025. So we're going to have to pay attention to this core PCE inflation, because this is really going to let us know, hey, are we on track for what the Fed was projecting in September? And if we're not, we're obviously going to see changes in this projection. So the next projection meeting is going to take place, let's see, it's going to take place here in December 14th. And that's when we're going to get another one of these economic projections. So keep in mind, you guys, inflation is still very high. We are still well above the Fed's target rate. And, the Fed, what they said yesterday, it's not a whole lot different than what they were saying in September. So you guys, be very, very cautious about getting sucked into this massive rally that we're having. I mean, we're right here at resistance. Maybe we get back above this, and maybe we double top all the way here at 432. Who knows? I mean, nobody knows what's going to happen in the shorter term. But just given the macroeconomic outlook, I think it's more likely that, maybe this is just another massive rally and then we fake out and we start falling again. So I hope you guys enjoyed this video. Stay safe and have a good one.